Well, good afternoon, everyone. It is Tuesday, May 6th. It is about noon Eastern, and this is yet another edition of Chart to Markets, brought to you by FEG Token and BYDFI Exchange. And today, I think we're going to get right into it and start looking at some charts, because there's a lot going on, as you probably already know. So let's start with something that we're a little bit familiar with, and that's going to be Bitcoin, because we've been talking about this for quite some time. And what have we been talking about? Well, we were talking about we got a clear entry signal on Bitcoin, going back actually to the 25th, 26th of April. That was a very safe entry. And what do we know about what's on this chart, right? This is our script, right? Our Blumhouse long short indicator script. Safe entry, price rides up these levels, and as long as there's divergence, you can stay in the trade, right? Now, what did we target for price? What did we think that price was looking for? The point of control on the volume profile, which is this thing on the right. Now, a lot of what we're going to talk about is going to seem like it's repetition over and over and over again, which is the definition of it, but it is. Because it's important that everyone sees that these things happen time and time and time again on any time frame, on any asset, in any market. Right? So price reaches our target, and at that point, if that's your target, you have a decision to make. Am I going to take the whole thing off? Am I going to take part of it off? You're going to leave a runner? That's for you to decide based on other things that might be on the chart, right? But we did reach our target. When we flip on a couple other quick indicators, like our stochastic RSI, for example, that ran super hot and overbought for an extended period of time, right? We know that can happen. But it doesn't mean that, at every tiny little cross that you execute a trade to short. What it's telling you is the buyers are still in the building, right? And as long as the buyers are still in the building, you have reason to stay in the trade. When it looks like they're leaving the building, then maybe it's time to go. And that's what we saw here. And what did we get? We get a confirmation also in our Fisher transform, which not a lot of people use, I don't think, but I like it because it filters noise. It doesn't give us a lot of false signals. So it's telling us that it's converging down. So we're in some sort of downward move. Our MACD, moving average and signal line are above zero, so that's bullish. But you can start to see the red histograms are really kind of showing you that maybe price is fading. But we have not seen a sell signal yet. So a lot of this is going to be, we're layering on our checks and balances on how to make a safe, profitable trade, because it's not always about what we make, it's about what we keep and what we don't lose. So if we start looking at other levels, what could price be looking for? So you have 20-day moving average, 50-day moving average, 200-day moving average, and those are SMAs, simple moving averages. Up here you have the 5 EMA and the 8 EMA, and yes, I understand that they're running two different averages on the chart. So what do we know when price reaches a level and starts to break down, right? Remembering that the point of control is really this big shelf on the volume profile. So it's like, okay, we kind of walked up the stairs and then we hit our head on the ceiling. We hit our head on this shelf, right? So what happens if you start to pull back, right? Break one level, find the next. So instinctively, we're looking for the 20-day moving average. And what do we know? In order to find out where price may be going on the right side of the chart, we need to look to the left. And if we look to the left along this area where the 20-day moving average is, you're going to see that it is really a consistent level of past price. Current price revisits past. Fail one level, find the next. We have not seen, a short signal yet, but you can see what price might be looking for. Does the 20-day start to sit inside this gap? Yeah. The 200 certainly does, and then the 50 finds a tiny little bit of a shelf within there, but really the lower value range is probably where it may want to rest. So we have three options: up, down, and sideways, right? So the downside is you pull back, you hit the 20, but you don't hold it, and you start to check off the other levels beneath, because price will look for those levels as support. The upside is you pull back a little bit, time and price come together in and around the 20-day, and because this is the first test of the 20 since the breakout, you have a higher probability that price will find support or bounce. And if it bounces, would it not maybe kind of double top this chart in and around the point of control? That makes a little bit of sense to me. That that looks like a possibility. What would it shoot for on the way up? Well, current price will look for past price, and that past price will look in and around this level of the upper value range, which is more concentrated past price. Right? These are the targets that we have. On the downside, of course, you fall into the gap and you start to check off these levels one at a time. And this is simply on the daily, right? This is just one look. What do we know? Well, we can pull our chart, grab a different time frame. And this is the weekly. Look at the support you're getting from the 50-day moving average. Look how oversold stochastic RSI was, and finally gave you a sign that it wants to kick higher, confirmed by the Fisher transform as well. So you got a few solid weeks of positive price movement, right? This is what you want to see. The problem is on the weekly is that this is the point of control way down here, but let's not even acknowledge that on the weekly right now. I think this is more in line of what you need to pay attention to, is the upper value range on the weekly. What do we know about this gray area on your volume profile? It's very light trading. How price reacts to the gaps in and out of it on the way up and down doesn't change, except that maybe the velocity does because it's lighter trading. So what's happening up here is we're getting above the 20 on the daily, on the weekly. But this is a premium, right? This is the upper value range, which means anything above it is probably a premium. Price will be drawn back to a level that is more acceptable, which would be the upper value range. And that's at a minimum, right? This is the process that we go through in order for price to go higher or lower. But it will be attracted to this past price, these benches or areas of past price here. All right? So what's the takeaway from that? If this gets exhausted up here, although you're still expressing bullishness, but if it does get exhausted, the move down could come with some velocity. let's just say, right? Because you're trading above the 20, the 50, and the 200-day moving averages. So you're trading all above that stuff well at a premium. At some point, price is going to want to come back and check it. Right? I don't know if going to a monthly really means anything. Other than the chart is still bullish, and I put that in quotes. However, it does feel a little tired on the monthly. Right? But this is what fractal analysis is, right? So what do I trade off of? 3 principles: filters, fibs, and fractals. The fractals are looking in and out of these different time frames to try and find what might be coming next, so that you don't get hit by something that you didn't see coming. Here's your 4-hour Bitcoin chart, just to dial it the other way. You're obviously going through consolidation in here. Do you have some quote-unquote tradable moments? Yeah, but ultimately what we want are the breakouts and the breakdowns, right? We don't want to trade the chop. Tradable moments, yes, but we really like the breakouts and the breakdowns. These are the ones you're hoping every trade turns into. And the reason that I point this out is simply because although this is choppy, yes, there are some moves here. And if you're a disciplined trader and you're using, premeditated stops and obviously predetermined exits, you will be able to manage the chop. It just won't be quite as rewarding, right? What you're waiting for or hoping to catch is one of these moves up that just keeps going, right? Which this one is here. What do we like about this one? Well, our signal comes right when we kind of get an idea that the stochastic RSI wants to start moving higher. A couple ticks later, a couple candles later, you get it on the Fisher transform. Right after your entry, what happens? Price starts to give you the run that you've been waiting for, right? Boom, 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 right up. Walks up the north side of those levels, and as long as you have divergence, boom, you can keep trading that level. When is your trade invalidated? When the chart tells you it's invalidated. Not when you think it's invalidated, when the chart tells you it's invalidated. So all I'm sharing with you is my methodology on when I invalidate the trade or the trend or whatever it is, how you want to characterize it. I'm just showing you my methodology. But this is stressful, right? Like if you're a little bit leveraged or a lot leveraged for some, right? This is stressful when you're watching these big wicks up and down, breaking all kinds of stuff, but yet the body takes you nowhere. Although this is a stressful candle, and they're all somewhat stressful, right? Like I get it. But how do I take the stress out of it? I take the candles off. I take the candles off. Do I like reading candlesticks? Yes. Are they important? Absolutely. Are they the first real form of documented technical or data analytics? Yes, they are. Do I have total respect for them? Of course. But what they can do when you're trying to trade a trend is they can mess with your mind. Oh my God, look at the wick on. Oh, I got the phantom wick stopped me out or liquidated me or whatever the case may be. So our job, again, is what? Monetize the chart. And one of the ways that we do that, believe it or not, is that we have to take the noise out of things in order to see more clearly. Right? And the noise can be chat rooms, it can be Twitter, TikTok, anywhere where you're consuming information about the subject matter that you're interested in. In this case, it's technical analysis, or the price of stocks, or crypto, whatever. And what I believe is that this is the language of the market. It is a real-time representation of what money is doing and not what people are saying. And the only thing that matters is price on a chart. It's telling you what people are thinking and doing all at the same time. Charts don't lie, people do. I had a friend tell me once there's two types of people in the world. Lion tamers and lion something stirreds. And how many lion tamers have you met lately? Lion tamers and lion you-know-whats. And how many lion tamers have you met lately? The takeaway is disseminate information for yourself, not based on what other people think, as convincing as they may be. All I know is that my experience in doing this tells me that this is a safe entry. And I've been able to program it into something relatively easy for anyone to use. This is telling me that the market is still bullish, and I have no business providing my opinion on it because it's not welcome, not warranted, and no one gives a crap anyways, especially the market. So, my response is, well then fine, I don't give a crap about all this. All I know is that I'm on the right side of a trade. That's all that matters to me. And as long as I'm on the right side of the trade, I'm going to stay on the right side of the trade. When is this invalidated? When the chart tells me it's invalidated. Not when this candle tells me, or this wick tells me, or anything else. It's when the chart tells me. So this is why we do what we're told. That's how simple this can be if you let it. Can you do what you're told? Yes or no? Can you be responsible with your money and manage risk appropriately? Yes or no? If you answer yes to those questions, you can do this. That's literally how simple it is. And the rest of the things that we show about how price reacts at certain points in time, and that's all the stuff in between. But I believe that this is the language of the market, and I'm being told what to do. So we go ahead and we do it. And it's not about being right, it's just about following what the market's telling us to do. And understanding what happens is, or what happens when price reaches certain levels and it may or may not be exhausted, and how do you tell if it is? To understand that when price retraces to a major moving average after its first breakout of it, it typically finds support or bounces. To understand what happens to price when it gets into these volume gaps, whether it's going up or down, to understand that, along with recognizing when things are perhaps overbought and maybe subject to a little bit of a pullback or a big pullback. This daily move could simply be a slight retracement back to the 20-day. It's the first touch of it since it broke out. Those things typically bounce, and then you get this kind of double top situation where then we have another conversation altogether. Right? That's the upside opportunity. If it breaks down, well, then you fall into the gap, and that's a whole other story as well. How do we find out where these things might start to happen or change in reverse? Well, we just start to dial back our time frames. Right? That's all we do. And based on this, you can literally chart anything. Right? Absolutely anything. Now, one of the things that we've talked about in here before, and I know, we've shown examples of this, is layer. Now let me take this off. Now, why is this here? Well, because that was my entry. A lot of us have been playing with this thing for a while, waiting for the the moment where we actually get the breakdown or the breakout. Yeah, there's tradable moments in between, but we have to accept them for what they are. But we've been waiting for this chart to break down. And finally, overnight, it gave it up. Actually, let me use this chart. Now, where did it start to roll over? This is the 4-hour chart. I was using this for something else today, but we're going to continue to use it. Where did it start to roll over? Right at the upper value range, right? So price pulled back, right? You get your clue, right? Price pulls back. You have a few candles here. See this equal price? You've basically got 4 candles where you can average that level out. What's really happening is all that's happening on this chart is that you have your impulse move down. We show this all the time. Sideways, back to those levels. And as soon as you get back to in and around the T line or the 5 EMA, that's a place where price, you can either, re-enter that short, or you're going to find that price takes off, right? I just happened to catch it at that level on the way down. And it's dropped even further than I exited somewhere down here. It's dropped even further to where I actually thought it's going. Why is this level here? I'll show you why. Because I'm going to go to the trend spider chart, and I'm going to go to the 4-hour. All right. So I'm going to take the auto fibs off for a second. Same 4-hour chart. Here's the level that we were looking at on TradingView. I'm assuming it's something like in there. What's this down here? What I'm showing you is this blue line here is the anchored VWAP for price, which is why I had it lit, because it was my target. That's what that yellow line is on the TradingView chart. TradingView doesn't offer this like TrendSpider does, and this thing is money. So this, like I said at the beginning of the stream, you need to know where you're going to exit before you enter the trade. Right? And you're going to, this is why we identify levels, right? It's the same level on this chart. Got into that other gap, into this light trading, and can't hold it, right? Now the entire world is going to wait to try and long this move, just like they tried to wait to short it. So I want to share with you kind of what happened to me in this thing. Because I was actually long. And I got stopped out. And a short time after, when I happened to look at the chart again, I noticed that these 2 candles had level tops. Now, what do we talk about? Sometimes when we get stopped out of a move, if I'm in a down or uptrend, if the divergence is still there, then I consider re-entering the short or re-entering a trade, right? Well, I got stopped out here, but I didn't realize that at the time that it was actually a top, right? So when I looked at the chart again and I saw this big point and I saw this divergence starting to form, I was like, you know what? I'm not going to wait. I'm just going to short it. And that's what happened. Now, I was fortunate enough to get ahead early, but it was late and I wanted to go to bed. So I literally put a stop in just barely under my entry. Like, it had just started to go green. And when I say barely under the entry, like, if I would have got stopped out, by the time I paid fees, I would have lost a little bit of money. Like, that's how tight it was. But you know how we say we don't know which one's going to be a runner? We just don't. No idea what the next candle brings, and the one after that, and the one after that. But we need to be at the right place at the right time. And in this case, the thing just broke down. Like, and I had no idea till 3 o'clock in the morning when I looked at my phone to see what was really going on. These are the things that everyone in this room is capable of each and every day. Do they all turn out like this? No, I wish. Right? I wish they did, but they don't. But anybody can do this. And essentially, all I was doing when I saw the point in the doji, I've done this enough times, I know what that typically means. I was just doing what I was told. All right, the long trade was invalidated, fine. It is what it is. Now the chart's telling you to do something else. It's up to me to decide whether or not I do this, whether I take the trade or not. But all of, this got me into the right place at the right time. Price breaks down, you have the divergence between these two levels, and it continues to fill. A little bit of a recovery here where price came back to the POC again. See? Any asset, any time frame, any market. Now, price did not hold. And remember, this was the anchored VWAP for price on the TrendSpider chart. That's why it's here. Didn't hold it. So we're obviously we got our signal to go short again. This was just a blip. Down she goes. When will this get invalidated? No idea. But when it does, you'll be in the right place at the right time. This is starting to look like it might be a bit more of a heavier pullback. What is price looking for? Current price is looking for past price. So we've broken through one level. Does it make sense that maybe it's looking for something? Oh, we've already taken that out. So $151-ish. And just continue to check the levels, right? Where do you find, look in here? You'll see candles where you can connect tops and bottoms. Those are typically areas where price might want to go. Where buyers and sellers have shaken hands in the past. And it's just a series of checking those levels to understand where price is in relation to past price at any given time. What do you see starting to form here? Lo and behold, on the 4 hour, this is the formation of the 500-day moving average. This is a fairly new issue, so there's not a ton of past price. And this is just starting to form. So perhaps this area in here, what is this? Well, that makes sense because it cuts through. Goes back to when I can connect a T-line or a 5 EMA on the left side of my chart to a relevant point on the right side, it usually means something. So let's mark it. Right, we're going to come back to this. Let's mark it. Let's take this off. We know what that is. It's just going to confuse us. We're going to see what happens. It's just current price revisiting past price. Change your time frames to see what's going on. If we look at SPX, so this is the S&P 500. Actually, I want to look at ES because it is more fluid. Okay, something must be going on. That's a pretty nasty rejection. So I don't know what's going on in the world right now. Here's what I know: that you have this impulse candle that wicks the 200-day moving average on the 15-minute and completely rejects. So somebody said something to somebody or something like that, because this is not a normal thing. But what is a normal thing that we see all the time, what did we just talk about? 2 level tops after a move higher. What does that mean? Maybe it's time to short. Right? We've seen this before. Price moves in and out of these gaps pretty quickly. There's an example of it in real time. What's it respecting? 50-day moving average. It's respecting the T line to a point, and you still don't have, even though this is a massive candle down, you still don't have a confirmed short signal yet, which means is that all this volatility is kind of yet to sort itself out. If it decides it's going to continue down, well, it'll just, the next candle will be similar to this one. But this is crazy trading, right? So somebody said something to someone, that's all I know. But everything that we're looking at, and we talked about this last week, let's go back to the S&P for a minute. Where did we think we were going to get resistance? Up in here. Right, if we look at the Dow, I think it might be a little bit cleaner. Here is the 50-day moving average. Right here. So prices moved up, tagged the 50, but didn't break through. Right? Now, is this the first touch of the 50 on the daily since we broke it? Absolutely. So first touches we expect to find resistance or fail. This is exactly what we talked about in our last stream, and the stream before that, and the stream before that. As price was moving higher, the test will be when it gets up here. And here we are. Now, is the chart still bullish? Yes. Still bullish because it still has this divergence. It hasn't completely failed the T-line or the 5 EMA or anything like that, right? It hasn't completely failed. So we wait to figure out what we're doing now. Are we going to chatter along here for a little bit? Are we going to eventually break down and then come back to the 20? Right? That would be the next move. Would it be the first test of the 20 since it broke out from it? Yes. So you would expect that move to find some support or bounce. To where? Back up to this level again. And then it becomes another test. Right? Just because you head that way doesn't mean you break through. So we wait to find out. We look at other time frames. What's happening on our weekly chart? So you had your sell signal back in February. What are we in now? First week of May. Back in February, you're told to get out. You have no idea what's coming next, right? We're just doing what we're told. So you could have gone short, and according to this is still in a downtrend. we still don't have, even though price went all the way down to 36.6, price moving higher still hasn't been able to pull the 5 EMA through the T line to start to show us that it might want to change trend. In not doing that, right, not pulling that average up to give you a change in trend, when we look at the weekly chart, what do we notice? That price is approaching the 50-day after its first failure of it. What are we expecting? First attempts typically get resistance or fail. And if this was to fail, then wouldn't we be doing something that we see on shorter time frames quite frequently, where you have price moves up, can't give you a change in trend, comes down, and then takes out the previous wave's low? That's the downside risk. We still don't have a green signal here yet. We still don't have the market telling us like it wants to move higher. Right? So this is still, although we've had, price move back up into the 40s, the chart has not confirmed the uptrend to me on the weekly. It's doing exactly what we expected it to do on the daily. Come back to the 50. From that point, it would be a first touch. We'd figure out what it's going to do from there. Our stochastic RSI is running hot. Hasn't done anything drastic yet, but we can see that it is showing us signs that it's awake. And the Fisher, which doesn't give us signs very often, is starting to show us that it might want to do a little bit of a change in direction here, which are these tops you'll see, right? Or sometimes they're bottoms. But it's when this is diverged and open like this, you've got a good trend move. So you had a trend move up to, and here, is it over? We're going to find out. If it breaks through the 50, it's going to look for the 200. It's not all that. Break one level, find the next. Current price looks for past. We're going to find out if it has what it takes to try and test the 200. Because that really is even a more significant test, because we know that the TA 101 tells us that that's our very basic bull-bear indicator on whatever time frame we're trading. So we're just simply looking forward and backwards to try and get an idea where things might be going. It's not about front-running the chart. Right? There's no prize in front-running the chart. Following the chart actually is a little more exciting. Now, this is Palantir. Palantir Technologies. Some of you may or may not have heard of Palantir. For those of you that have not, it doesn't really matter. For those of you who have, I'm going to show you something. So I had someone ask me today and this is where, recognizing certain patterns and things like that are kind of important. So I was asked earlier today if this Palantir chart, and I've taken the candles off, is a double top. Well, is this 2 equal points in price? Yes, that is, but I actually see this differently. If we were looking at the chart here, what would you be telling me? You would be telling me that it's a double bottom. And you'd be correct. It's a double bottom. Double bottoms, when you see them, where there's an all-time high, your expectation is what? You're going to take out that all-time high. You're going to get a double bottom bounce, and you're going to go to the moon and all that stuff. Well, what really happens? What really happened is that the people that didn't get out the first time took the opportunity to get out the second time. And they did it on a buyer's dime. What this actually is a failed breakout. It's a failed breakout. It is not a double top. It's a failed double bottom breakout. And it just so happened that it took place at an all-time high. Look at the points. Would you have gotten out there when you saw that point? I hope so. Would you have gotten out there when you saw that point? I hope so. Forget the earnings. Forget all this other stuff. The chart's telling you. If you don't follow David Nikoski on Twitter, follow David Nikoski on Twitter, or X, or whatever they call it today. Follow David Nikoski. He's a great technician. Follow the guy. He's going to show you stuff like this. Probably before anybody else will ever bring it to your attention. But this to me is actually a double bottom that failed, right? It's a double bottom breakout that, got up here and everybody said, no, time to go. I should have took the first opportunity. And they sell off. Where might they want to sell off to? I don't know. Price is lazy, right? We know that. What do we know about price above the upper value range? Price above the upper value range is a premium. These double tops took place above the upper value range. Don't write this down. This is very important. When you see this, be very, very, very careful of the downside. The gray area, light trading, double tops, or two equal points in price, failed breakout, paying a premium. Add it all up. Gives you a pretty good reason to get out. But how do we know? How do we know? Well, we dial it back. We open up our nesting dolls and try and get an idea. And really, we didn't get an idea until 3:15 yesterday. So you had a slight opportunity before close to buy puts, go short, whatever, sell your long, whatever you wanted to do up there. But our script did tell you, and it did tell you in enough time that you actually could have monetized it. And that's the difference. Can you monetize these things, right? This is telling you that you could have, which is super interesting. And then you get a massive gap down. Where does price bottom out? The lower value range. The same thing I showed you on the 4-hour layer chart we're just seeing here. Breaks down right to the lower value range. The bounce basically kind of tests the T-line, does not quite make it, but you're trading below these levels and the downtrend continues. So don't let anyone tell you that you don't have the tools, you're not sophisticated enough, you don't have the experience, you don't understand the inner workings of every indicator on the planet, you didn't go to the financial institution school of whatever, it doesn't matter. You can learn how to read price on a chart. And no one's going to take it away from you, ever. What do you think price is looking for? It's probably looking for the upper value range, doesn't hold it. There's a pretty good chance you find the point of control. These are all things we see each and every day. Let's look at BNB. So here's a level that we've obviously had in here before, and what are we doing? The same thing we do on every other chart. We're trying to establish where price might be going on the right side, and in order to do that, we're looking for levels of where it's been in the past, because chances are it will be drawn to those levels both to the downside and to the upside. It looks very different, doesn't it, from the Bitcoin chart. Now, it's interesting. This is why I like the weeklies, because it's really giving us a pretty good look at trend, right? Like, yeah, we got a short signal or a sell signal, and the divergence has stayed intact in between these levels, which is kind of saying, hey, even with all that crazy price action, the trend has been down, which is kind of interesting. So, you know, it's being very truthful, our script. Very truthful. Not often do we see these kind of moves, do we? Not often at all. You know, overnight, price was sitting on the 50-day. This is why, you know, it's okay if you're trading stuff like this to set targets in places that you think might be unreasonable, because there's a chance they might show up. And boom, they let go. And it doesn't matter what you're going to look at today. It looks like there's red everywhere. But everything to me is merely technical, right? This is Tau daily. Entry signal, a little bit of resistance at the 20-day moving average, right? That's kind of what you would have been looking at. But you can see the divergence between the 5 and the T line. You don't break down, it's 50 that's causing you a little bit of pain, and you get a little bit of consolidation off the 20 and up you go. And this is like, yeah, this was the early move, but most people aren't paying attention to here, but you'd already be in well before. Did this invalidate itself yet? No. It hasn't. Is it getting choppy up here and a little flat and consolidated looking? Sure. What do I think it might want to do? I think price and time want to come together. So this is the point of control. Let's bring this back. There's the POC. Here's the 20-day moving average. Maybe time and price comes together in this area where buyers and sellers have shaken hands in the past. And perhaps you get a continuation off the 20-day. And if it's not a continuation, chances are it's going to be a failure of both the 20 and the point of control. And it'll pull back to, at a minimum, this level in here, which is the lower value range. And then you've got the 50 underneath there as well. And this is simply a matter of laying the checks and balances one over the other, right? That's basically what we're doing. We have a handful of things that we use. We don't need much more. We just have to have an understanding of how price moves. And again, it doesn't matter what we look at, the rationale that we use is exactly the same. Right? This is Solana. You got a safe entry signal back here. The price just climbed up 5 EMA and the T line. You get expected resistance to some extent at the 50, but because these levels are still diverged, you have no reason to panic and exit the trade. The market's telling you that you're okay. Price moves higher. Here you start to get invalidated. So price, you get your sell signal, you get to the 20, now you've failed the 20. So you break one level, you find the next. And everything is fractal. Daily, weekly, monthly, 5 minute, 15 minute. That's fractal analysis, right? That's what it is. Doesn't matter the time frame, the behavior is still going to be the same. This is just erratic, isn't it? This is just nonsense. You wouldn't want to trade that on a short time frame. But on a longer time frame, it doesn't look so bad. So a lot of you, when a lot of people, when you talk to me about your experiences when you're trading, the conversation usually ends up that it's moving too fast, it causes stress and anxiety or whatever else, right? A little bit of mania. And I understand how that happens because I've been there, right? I get it. So this is why I talk about filtering the noise. The noise, sometimes the candles on the chart. If we go back to that 5 minute craziness and we take the candles off, does this help us? Yeah, a little bit. A little bit. I don't feel as stressed out looking at this chart now. And as you become more experienced kind of using the methodology that we're talking about, when you see this big expulsion here and the divergence, you see it again here, that is kind of a sign that you're gassing out a little bit, right? And you're going to get a pullback. The problem with these crazy up and down candles with big wicks is that if you're using leverage, which a lot of you are, you're going to get stopped out frequently or liquidated, right? One of the two, or right? That's what's going to happen. What happened here? So you have to balance the leverage with the time frame and the length of time that you actually want to be in the trade. And then once you're in and you're profitable, then you got to manage it. But all of these charts now are going to start to show us a little bit of softness. Let's look at ETH for a moment. It's ETH-FI, sorry. So what do we know about support and resistance levels? Right, so we're sitting literally on the 20-day and the 50-day. That should be significant support for price, right? If you were going to fall down, and you were going to fall down on anything, to fall on top of the 50 and the 20 at the same time should give you enough of a cushion, would you not think? That would be logical to think that. But this is why we can't always rely on one data point. Because we have to identify the risk on the chart. And if we look at the volume profile, we know we're at the point of control, and we know we're at the 50-day moving average with the 20 tucked in here as well. We can see our lower value range and upper value range. And we can see the gaps both up and down. Again, layer your knowledge on. So here's our entry signal. Let me back the chart up. Right, so you're kind of grinding sideways and you're thinking sooner or later price has to do something. Right? We get an entry signal on the daily for ETH. You see the expected kind of resistance there at the 50, but you have the divergence in those two levels like we talked about. Now here we sit. The divergence is still intact. We don't have a sell signal. And we're sitting on the 20-day moving average, and it's the first time we've seen it since we broke out of it. So we know that we should expect to get some resistance, or support rather, in here. Right? We've got, the 50 in here as well. But again, we can't rely on one data input. We don't want to fall into this gap. You don't want to lose the 20. Even though you should get some support here, if you don't, you fall into that gap and that becomes problematic. Or alternatively, this is the upside potential. You've retraced back to the 20, and this is going to be a first touch continuation, and you move up and take out the previous wave's high in this level at around 1870. And if you were to do that, it would put you into the volume gap to the upside. That's the opportunity to the upside. And this is the downside risk. If you fail here, you're going to come back and take out this previous wave's low, and in all likelihood, you'll be drawn to the lower value range. Right? This is simply a process of layering on the knowledge that you have. Right? So our script gets you good entries long and short. Like this would have been a great short. From the 27th of March, you could have taken it off down here, but let's even say you took it off in this neighborhood to the 25th of April. That's a nice run. This is even a nice run, but nothing lasts forever unless you have just a buy and hold strategy and you're never gonna trade anything. Stochastic RSI has been running hot for a while and is showing signs that it's rolling over. Same with the Fisher. The MACD is arcing just above the 0% line. And if it arcs, breaks, and then breaks zero, well then you're in bearish territory. And more bearish things happen than bullish when you're down there. Right? This is just a process. And then we change our time frames in order to be sure we don't get hit by something that we didn't see coming. So this is kind of another example where price has gotten to the point of control and faded a little bit. Very different looking chart than Bitcoin, but worked its way to the point of control and is fading a little bit. It just hasn't made it to the 20 yet. So we're still more downside to go if it was to get there. Notice how price seems to be holding at this level. So the base of this candle, the base of this candle, the base of this candle, and so on and so on and so on is consistent. That is more bullish than it is bearish, right? It's holding that structural level. And this is the daily, so it's more relevant than if it was a 5-minute chart, right? So it's important to hang on to that structural level as well. So if you break it, then you're going to find yourself down here. And this is just, it's repetition. It doesn't matter if you're trading crypto. It doesn't matter if you're trading stocks. It doesn't matter if you're trading ETFs. Right? Let's see if can we find an ETF? Let's see. Here's Nugget. It's a gold ETF. The weekly. gold miners 2x bullish. This is a weekly chart. Are these candles kind of erratic? Sure, they are actually. Massive green candle, massive red candles. But when we take our candles off, you can see that this thing has stayed very bullish, even with the volatility. Everything, whether it's it doesn't matter if it's an inverse ETF, a long ETF, it doesn't matter if it's leveraged. Nothing changes, right? Our analysis doesn't change. Look how consistently price came back to this lower value range level, right? Several times. Where did it struggle to get above, right? The same thing. What you're seeing in here on this weekly chart is the second attempt to break through and make a new level. The chart is still bullish. Although there's some massive retracements in it, it's still a bullish chart. And this analysis is intended to try and keep our bias out of our trading, right? We're simply looking to do what we're told. And that is very difficult for a lot of us to do, right? Like, we're in here to learn how to do things for ourselves, right? To become independent. Now you're telling me to do what we're told. I'm pretty confused, right? I get it. But it doesn't matter what we chart. This is XRT, and it is an ETF of the retail sector. So think of, department stores and other things like that. Charts no differently. Way up here, back in November of 21, you got a sell signal. Did you have any idea at the time it was going to bring you all the way back to the 200-day moving average? No, this is what you would have been looking at the time. Right? And there's a reason why I show you charts of various different things, because I want everyone to understand that it doesn't matter what you're looking at. So we know that our volume profile's on, right? We can see the levels that are there. But most importantly, we're also trading above all three major moving averages. And whenever we're trading above those three at the same time, I start becoming aware that, maybe we're going to have to come back and test the 20 to start. And then, you kind of think of, if I break down, I might be kind of onto a significant runner. Well, we get our signal, right? Our signal to sell or short, however you want to play it. And it brings you right to the 50. And the 50 is it's the first touch of it. Here's where you broke out from the 50 back in June of 2020. And this is the first touch of it. And it holds, right? For a while. But how did you know it wasn't going to hold? Because the divergence that exists between those two levels. And it doesn't hold. And as long as that divergence is in place, no matter how crazy the trading, no matter how wiki or how wild, you stay in the trade. This could be Bitcoin. It could be IBM. It doesn't matter. It could be XRP. It could be FEG. It could be anything, guys. It doesn't matter. Break the 20, find the 50. Break the 50, find the 200. No matter how insane it sounded when someone said at 105 or $100, I'm shorting XRT. Did anyone think that it would end up at the 200? If they understood the behavior of price and how to read price on a chart, and they acknowledge that this is a language and they're prepared to learn the language so that they can monetize the chart, they would have known that. You break one level, you're going to find the next. You break one level, you're going to find the next. I do not care what anyone says in between here. I don't care. I only care about one thing: what money is doing. I don't care about what people are saying. I don't care that the retail executives say they're having the best year ever. I don't care if they're saying that their same-store sales are increasing. I don't care if they're saying that their foot traffic is up. I don't care if they're saying their gross margin per square foot is up. I don't care if they're saying that their inventory levels are down. Make sense? All of that is noise. All of it. It's all noise. The only thing that matters is how to read price on a chart. That is it. One job: monetize the chart. Chart told me to go long. Okay, for how long do I stay long? Until the damn thing tells you that you're done. How's that? Told you to go short. How long do you stay short? Till the damn thing tells you you're done. Do you think we're done? Probably not. The chart doesn't lie. And there's only so much information in the market that you're going to be able to understand at one time. And out of that information, there's only going to be a handful of it that you're going to be able to use that's tradable. Much of it is unimportant. So do I have a macro overview of the world? Sure. But at the end of the day, it's the price on the chart that matters. And honestly, I'm completely indifferent to what direction it takes. Like, I literally don't care. I don't care at all. If price wants to go up, I'll be there to go up with it. If it wants to fade, I'll be there to fade with it. My point of view is unimportant. This is the US dollar. Now, at one time, I had the dollar breaking this level. But then it was invalidated. And when it's invalidated, it's invalidated. Like, you're not married to your point of view. You're only going to be right for so long, right? If you're trading a 5-minute time frame, you're only going to be right for a handful of 5-minute candles. Like, nothing is sustainable forever. It just isn't. But it's just as we have to do what we're told. And this daily chart obviously shows a breakdown, but we'll smooth it out a little bit and we'll look at it on a weekly. The weekly said that we should, we get a sell signal. Get a little bit of support from the 20. You would have expected that because you're sitting on it. You didn't expect this. But here all of this divergence is still in place. Now, what do we notice about these two candles again? Two equal tops. Two equal levels with the divergence still intact. And down you go. So we have an impulse candle down. We show this a million times, right? On every time frame. Impulse candle down, but what happens? Instead of snapping back and trying to test the 50, and this is a weekly chart, right? So this is super weak. No pun. If it doesn't challenge this level, that's not a healthy bullish move at all, right? So you have an impulse candle down, is all you do is go sideways to get back to the T line and the 5 EMA, and then the trend down just continues again. And what do you think this candle's looking for? It's trying to take out the previous wave's low. And if it takes out this level here, we have to back up the chart to find another. Maybe down here. So I obviously have a level down here a crazy number of 96 and change, 96,032, that's not healthy. But this is what the chart says. And we can only trade what's in front of us. And this is why it's important to block out the noise. Because we're going to hear all kinds of stuff that's not really relevant to what we're trading on the chart. Again, this could be anything at all. Anything. If you're trading futures, same thing. Short time frames, if you're any future traders, this is awesome. Because it gives you a heads up before the rest of the market. Let's see. There you go. So at 3 p.m. yesterday afternoon, this is the 15-minute, let's go to the, yep, same on the 1 hour. So if you were trading futures up to and after close yesterday, you would have been able to monetize this whole move down. And feel good about it. Right, here it is here. That's on the 1 hour. So you saw it on the 15. Here it is on the 1 hour. And all I was doing was I was aligning the short signals. That's all. Right? So again, you've got this big point, tells you there's a change in direction. These little dojis with the wicks were probably an indication of that coming. This candle blows right through everything and rests on the 20. Right? So all this divergence is telling you that you're still in a downtrend. And in fact, if we look at the current candle, even with this big move up here, back to 56.70, it couldn't pull the 5 EMA over the T line. Still bearish until that changes. Right? So this is technically still a valid move down. Right? It's not, hasn't been invalidated yet. Again, it doesn't matter what we look at. It's what we're going to see time and time again. I know someone trades Litecoin in here. You get a great signal up here. This is a 1 hour. It doesn't matter what time frame you could probably catch it on the 15 a little bit sooner. Way up here, it's a failure of the 50-day. Right? Here you break the 50-day on the 15-minute Litecoin chart. Would have been yesterday. There's your first touch of the 50 since breaking it. And what do we typically expect? Failures. See that big point? It's a big change in direction. You get all this break through the 200, break through the 20, all this divergence. It's a big move down, right? And when it starts looking a little bit choppy on the 15-minute, look at it on a slightly longer time frame to see if that longer time frame is still valid. Right? Here is yet another example of here's your move, right? Boom. You would get really scared. A lot of people got stopped out there or went long, right? Because, hey, oh, here's our bottom, right? Everybody wants to call that, oh, this is the bottom. What is it really? It's just a retracement higher in a downtrend because the downtrend is still intact. And there you go. This is pretty easy stuff. Divergence down, all of this nonsense, take the candles off. If you think you're going to have a heart attack, take the candles off. Because I'm making the assumption that everyone has a target to exit, and they have a stop loss in place. So there should be very little risk, right, for anyone. Nice clean entry signal. There's the divergence. The trend is still intact until it's invalidated. This is going to take all the anxiety, it should take the anxiety out of your trading, right? What do I get asked the most? When do I buy and when do I sell? When do I long? When do I short? And then how long do I stay in the trade? Because I don't know, right? Well, how about this? There's when you enter and you stay in the trade, you stay in the trade, you stay in the trade. There's when you exit or go long. Simple stuff. Right? And what do we do for look for targets? And then we start to throw on just a few moving averages. As you guys know, I will also use a 500 and 1,000 because everything is fractal. And although you might not see them on one time frame, you may see them show up on another. And it helps me provide ranges. So what do you notice about the 1 hour Litecoin chart? Do you notice how it finds support? Broke down through here a little bit, but this is an important level for it. It's going to be the 200 now. Everything is fractal. That's why I do this. It allows us to track price and kind of track it and trap it, if that makes any sense. So we can try and figure out where it's going based on where it's been and get a good idea of where it might want to go next. So as soon as I add the volume profile to this chart, there's some significant downside draw here. Right? We've shown on so many charts today how the importance of the point of control. And this would be an example of let the market come to you. If you believe that you want to buy this thing, you want to buy it where it has the best opportunity for you to make some money. You can't force your trade. Right? Like I would certainly be, there's a reason why you would want to, you look back here, you can see why buying off this level is important. Right? So when it breaks down, when it gets down here again, if it doesn't hold the 200, whatever move it makes from the point of control will be a substantial one because it will be making it either into a gap to the downside or into the gap to an upside. We just have to kind of wait to find out. Right now, we're starting to see a little bit of a change, although it's still diverged down and there's no crossing or anything like that. Maybe it finds a little bit of love here. Or is it just going to be another case of a move down, a slight retrace higher that doesn't break any metrics of a trend change and then rolls over and takes out the previous wave's low, and in this case would probably find the 200 and fall into that gap. Right? Multi-time frame analysis is all we're really doing here. Right? These are things that you're probably doing anyways, right? Or I would hope that you're doing anyways. Let's look at Apple. What's going on? Let's take off a little bit of noisiness here, just quickly. That was 1,000 days on Apple that gave it a little support there. So what do you see on this chart? Are we making higher highs or lower highs? Well, they look lower to me. This candle today has probably got some people excited because it's green, right? But what's really happening here? You failed you got a sell signal, right? Now you're trending down, you're trading below these levels, but this candle has no ability whatsoever to try and test the 5 EMA on the daily. That's weak. That's weak. This is one of the biggest companies in the world. right? It should strap its big boy pants on and have a big candle that would retest these levels or break through them, especially after earnings that they were so proud of. But that's not happening. In order to make sense, let's look at it on a weekly chart. Here. So what is this on a weekly chart? Here's this light stuff up here. We know that's kind of soft trading, and we know this is the upper value range, and anything above it is a what? A premium. Why would one think, while trading at a premium on a weekly chart, that this thing is going to go on and make new highs? I don't know. Maybe it's just me. You didn't even really get a double top here, right? Or anything like that. This is just, you're going to be able to start drawing trend lines on the weekly pretty soon. But at no point, look at the divergence. The chart is telling you, no matter what these candles are saying to you or how you're interpreting them, because you could be interpreting them wrong, but you're being told that this downtrend is still intact. You are being told that this uptrend on the weekly Apple chart was still intact. Where would price maybe want to go back to? Oh, I don't know. Maybe the upper value range? Like in here and here, because it's obviously shown that it's a place that it's been comfortable with in the past. And where has it even been more comfortable in the past? Down here, $150 at the point of control. Does that freak people out? Like, let's look at a monthly Apple chart. It's really hard not to say Apple chart. So nevertheless, this is the monthly. Has this thing had any sort of massive pullback at all in its last while? No, not really. Here's your upper value range. This is a premium. Big gap. Point of control, and this is not really relevant. It's this area here that I'd be more focused on. Look at the tops of these candles. Look at the bottom of these candles. Current price revisits past price. So on the weekly chart, you were told to get out. Where could we be looking? I'd first look to the 20, and what did we do? We broke it. We broke it. So break one level, find the next. What do you think we're looking for? Let's look for the 50. Way down here. So I'm not sure if it was the Apple chart we talked about last week or not. I don't know. But there was one that had a big, giant wick. Maybe it was even the S&P, I'm not sure. But we were saying how it's unlikely that we're going to leave that wick there to not be tested. Where is that wick? Oh, I don't know. Right along a perfectly benched area of past price. It's probably why it's there in the first place, and it's very unlikely that we're going to leave it there. Which means in order to get here again, we would have to break the 50-day moving average, which would be bad on a monthly chart. And I don't get worked up about where these levels are, right? I don't care if it hurts somebody's feelings that price may go to a certain level, right? Like, this isn't the healing of feelings business. This is not what it is, right? That's not why we're here. And you can't make apologies for that sounding cold. It's reality, right? It is reality. Like, why did Bitcoin come back to this, to this $30,000 level? Because it's been there before, right? That's why it came back, because it's been there before. Now, maybe I hurt some feelings a long time ago, trying to tell people that this thing's going to roll over, and when it does, you're going to look at $30,000 Bitcoin. This is at 60 something. I'm the crazy one though, remember that. Uh-oh, what happened? Double topped, broke one level, found the next, found the 50, caught a bid. Where did you get to? Equal level of past price. Everybody who didn't take their money off here thought it was a good idea to do it over here. And what did it do? It dropped price to where? The $30,000 level again. And so on, and so on, and so on, and so on, because current price revisits past. It's not in the, this is not the feelings, healing the feeling business. This is the monetize the chart business. If you get upset because someone tells you that something you own is going to a certain level that you're uncomfortable with, that is not my problem. That is a you problem. And it's a you problem because you're still not sure how to read price on a chart. And if you were, you wouldn't have those feelings. Like, people complain all the time. Oh, woe is me, the world's unfair, blah, blah, blah. Yeah, you know what? Life's unfair, right? Like, I get all that. I really do. But there is nothing that you can do or I can do to change it. Like, there just isn't. All we can do is educate ourselves, right? Educate ourselves to read price on a chart so that we don't become victims of the market. I don't care if it's the stock market, the crypto market, the commodities market. It doesn't matter. This is the best way that you can give yourself something that no one can take away from you. This is a weekly chart, a daily chart of oil. We've looked at this chart before. What's happening today? We have a big up day, right? I think it's up 3% or something to that effect. But what's really happening on this chart? The way that I see it is simply that we have two green candles. The last one, the current one, has tested the T line and is currently failing. I understand that this is two equal bottoms, right? I get that. And is it relevant? Absolutely. It is. But I'm focused on being told that this is a short, and this divergence being still intact. Yes, we got a couple good days of green candles, but it hasn't changed anything in regards to trend for me. And if we look at it on the weekly, what are we looking at? This line was here. As soon as we could connect a couple points, right, we drew this line. And it stayed very, very, very true. Another sell signal. Divergence is intact, or you have a retracement higher. These are just simply green candles in a downtrend. This divergence is telling you that's exactly what it is. And it's not up to you to second guess it, right? I am not smarter than this chart, and neither are you, right? Shit, some people will say I'm not smart at all, right? So I just do what I'm told, right? Which I really suck at, by the way, like many of you probably do. It took me a long time to get good at doing what I was told, and probably cost me a lot of money in the process. But now I do what I'm told, and I'm trying to get you guys to do the same thing so that you don't become the one that has to spend all the money trying to figure it out. Right? Simple chart, weekly chart of oil. I don't care what's going on in the world. The divergence is still down. Did we hit my target of 61.66 once it was called back in September of 23 when oil was like 95 bucks a barrel? You bet. Why? Because you were trading above the 20, the 50, and the 200, so you're always looking for an opportunity to fade. Maybe, I don't know, I'm not Rob Smith from the Strat who has a, is very, very interesting candlestick methodology. I am not that guy. I don't claim to be that guy. But even I know that this is probably a candle I want to short. A doji like that at the top of a bull run on a long-term chart is probably a candle you're going to want to entertain shorting. You don't have to be an expert candlestick reader, right, to do it. But what happens? See the divergence between our two levels? There you get your sell signal, you break the 20, you break the 50, you come all the way back to the 200, and then it just becomes a range game. Range, right? You break the range, right? You get a nice move off the 50-day. These are the tradable moments, right? These are the tradable moments up in a downtrend. This is why I'm showing you this chart, because this is a massive move from $95 all the way down to, wherever we are today at, let's say 60 something. But there were tradable moves in this big downtrend. But this move is incredibly technical. Look at this doji at the 200. You basically wick it and run away like a scared cat. Break the 50, and the move continues down. I now know that this 6166 number was a real level because we've spent more than a day here, right? So there's that means to me that this is significant. And again, I go back all the way to here. Current price revisits past. It's always looking for something, right? Again, kind of averaging off the T-line and the 5 EMA way back here in 21. That was the original target, but now it's hit. So what do? Well, we do the same thing we did before. In order to figure out where price is going on the right side of the chart, or to increase the probability of it anyways, we need to look to the other side, to the left. So what do we see to the left? And this is probably going to shrink for you guys a bit, but I've tried to outline here with this gold rectangle all of this past price, and I've tried to catch the tops and bottoms as best I could within this range, because I believe somewhere in this $51.68 level, price will come back to here. There's just too much past price here for that not to be a real level. Let me just put it on the monthly. It'll shake it out a little different. You can kind of see it on the monthly a little bit better. Fail this, then I'm just simply looking again to the past. There's a bit of a bench here. It catches this move down here. It catches the wicks of these candles, and then the tops of these. Again, more wicks in here. So that becomes a legitimate level for me, because current price will look for past, a place where buyers and sellers have shaken hands in the past. That's all it is. If you fail this level, which is crazy town, you start looking to the $20 level again, right? So you're looking here, and then you're looking here, and so on and so on and so on. And why did oil come back? I'm going to shrink this even more. Why did oil come back to that level, that $20 level? Back in 2020. And the reasons why, I should say, are completely irrelevant. When I say why, I'm talking about the technical reasons why. This is a 3-month chart, by the way. So this is some serious time in here. This is 3 months. But over the course of this 3 months, this candle, this red candle, landed at the $20 level. Right? Why is this $20 level here in the first place? Because it's picking up the bottoms of these two candles. It's picking up the top and the bottom of these two candles. And I've done my best to try and capture tops and bottoms through this bench back into here. which continues on into 1987. If you'll actually see this move here, get this move up and then this move down, and then it averages out in here as well. So this was my number. I was one of those crazy people that actually said $20 was a possibility. And it was after that that I got my first phone call from an institution. True story. Current price looks for past. I don't care how much it hurts your feelings. You shouldn't be married to it in the first place. So if you find yourself crying because something you own is going to go down, then you have to determine whether you're a trader or you're an investor. Right? Investors are prepared to take a bit of a haircut. Traders are not. We don't like that. We don't want to lose any money. And if we have to take a haircut, it better be a damn short one. Right? And that's where the discipline comes in. But current price will look for past. The chart or the asset doesn't care who you are, what you think, how much money you have or don't have, how desperate you are to make more, how hurt you'll be if you lose it. It does not care. That is why we do this, to increase the probability of you making a safe, profitable trade so that you can look after yourself. No one will look after you better than you. That's just the way it's going to be. You know, the only individual that really has your best interest at heart is going to be you, ultimately. Right? You have to be the one to make your own calls based on good information. Right? You have to be willing to be patient when you need to be patient, and if you're patient, you'll be rewarded. Thanks to King Koopa for pointing me in this direction of layer, because it caused me a little bit of frustration for a few weeks. But ultimately, once I got a handle on being comfortable finding a time frame where there were kind of tradable moments for me, right? I was ultimately just being patient for the opportunity to go short, which is what I did ultimately. And that was a rewarding trade, right? So thanks, King Koopa, for that. So the other thing I want to address today quickly is that I'm going to be choosing 2 more user ID numbers from BYDFI. Last week's winners, they should have their trading bonuses in their account. They probably would have been there yesterday or the day before. So today I'm going to be selecting 2 more. If you are not registered with BYDFI, it is a no KYC sign up. I think simply an email address or something will get you on board, and it is a super slick interface. If you haven't used it, I think you're going to really like it. I enjoy it, and again, super simple sign up, and it's your trading view charts are going to look the same and all that. You're not going to feel uncomfortable at all. And yes, so we're going to be choosing 2 more user IDs today. So get your sign up, get your user ID done, and then hopefully you're going to be a winner, and it'll take a day or so to get your bonus in your account, but you will find it. If you're not using the script and you want to talk to me about it, please do. You can message me pretty much anywhere. You know where to get me, on Telegram or on Twitter or YouTube. You can get me anywhere, and I'll walk you through how to do it. It's a subscription that'll pay for itself in a trade or 2, if not 1 trade. So I think you'll all find it very useful, and I use it myself, and it is a culmination of, I've been doing this for almost 25 years, I guess, so my 25 years of experience all together in the simplest tool that I could find. I use it because I have a tendency to overthink trades. I'm competent at picking, good entries and exits, but everything in between there, I had a tendency to overthink. And maybe some of you have the same type of issue. I don't know. And it was something that troubled me enough that I had to figure out a way to take the thinking out of my trading, because everything that happened between here and up here, I would somehow find a way to screw up, right? I wouldn't manage the trade well, right? So part of it is getting good entries. You know, there's some stochastic RSI parameters working in the background that are kind of the secret sauce, right? But it's get a safe entry. So it's not about picking the bottom, right? You're very rarely am I going to pick a bottom with this. That's not the intent. The intent is for you to make a safe, profitable trade. And part of that safe part is paying the insurance, right? Like letting this stuff go at the very, very bottom in order to know that the trade you've just entered is a safe trade. Where could you put a stop on a trade like this to start it? Probably right in this level in here, right off the 50. Chances are you'd get ahead really quick, and from there you own it, right? It's our job. I want to get you in the driver's seat, right? That's what I want to do. I want to get you in the driver's seat. That's really important, because from there you can manage your trade effectively. But this script gets you in at the right time and gets you out at the right time and helps prevent you from getting faked out along the way. So some people will say to me that I take too much risk. I'll admit it, right? That's what they tell me, because I'm prepared to stay in a trade like this for longer than maybe some others would. But why am I prepared to do that? I'm prepared to do that because I don't believe that I'm actually taking on risk. Additionally, my interpretation is I got to kick an entry, but not just that. A lot of people did. I think I'm the only person buying off the 50. No, everybody's doing it. But what we're doing differently here is we're managing our trade based on the expression of the trend. And as long as the trend is expressing itself higher, we can stay in. So, you know, the people that, you know, took this first big move and then maybe took some off in here, oh, because it's, you know, it's going to roll, it's going to roll. No. Just follow the chart. It'll tell you what to do. Just do what you're told, right? It told us up here, this is a 4-hour, 12 a.m. on Saturday. Midnight Saturday to short Bitcoin. How many did it? How many were in the right place at the right time? The script got you. The script told you where to be. And it told you through all this BS in between that, at least on this time frame, this chart has not invalidated yet. Could you have taken it off down here? Of course. Those are the decisions that you have to make as traders. Right? These are not, you know, entry and exit signals. They are signals long and signals short. Where you take it off is up to you. But this kind of like where we're at today, and Layer is still giving it away. And did I take mine off? Probably somewhere up in here, I think it was. Yeah, I did. But that's okay. Right? Like, I don't know, like, it's a ridiculous return on that. It's almost shameful to talk about it, so I'm not gonna. I'm more than happy. I don't care about the pennies. Right? See this entry up here? This flat stuff? Right? This was the impulse down. This is why we use multiple time frames, right? You could be looking at different time frames, but what you would see when you got to the 4-hour, impulse down and sideways. Whenever I see that, that's a sign of weakness. So that gets my attention right away. Boom. Divergence. You knew. You didn't know how bad it was going to roll, but you knew it was going to fade. All you guys can do this. This is an exceptionally lucky one, but everybody can do this. So I think we're going to have a lot to look at by the time we come back, in a couple days, because, you know, this stupid thing looks like it wants to go all the way back to where it started. I'm sure that it won't, but it certainly looks that way right now. Our indexes are at really tricky spots, right? Like we were saying, let's see what happens when we get to the 50, then we'll make a decision. We'll see what happens to price, just like Bitcoin, right? Let's make a decision when price gets to the 200 here. Can it break the 200? Yes. If it wants to break the 200, chances are it was going to look for the point of control, which was up in here. We're going to have lots and lots to look at, even oil, right? Big parabolic move over the last couple days. Is it going to go anywhere? Well, we'll see. If it breaks here, probably want to test the 20. Right. Repeat, play, repeat, play, repeat, play. So I think we'll probably close it up for now, but we're going to certainly come back on Thursday. We got a couple technical things we're going to work out with our stream to try and make it a little more interactive for you guys. But hopefully by Thursday we can do that. Get your sign up at BYDFI so that you can be eligible for our bonuses that we give away in each session. We're doing this. It's not just a one-off. We're doing this in each session until they tell us we're not doing it anymore. And for those that haven't checked out smartdefi.com, please do it, because I think it's one of the coolest things going, being able to tokenize pretty much anything within minutes. It's, if you like tech and the possibilities that it brings, check out smartdefi.com. So thanks to FEG Token and thanks to BYDFI, and I will see everyone on Thursday of this week. So take care, and